Daily Fiscal Pulse for the 15th of May, 2026. What you're about to hear reflects conditions as of Friday's close. This is a single-day look back on the flows, not real-time data. Let's set the stage for what's happening in markets at the moment. The story right now centers on equities and market moves. You're seeing headlines like traders now see next Fed interest rate move as a hike following inflation surge dominating the conversation, and that narrative is clearly bleeding into price action. Still, it's important to distinguish between the chatter and what the actual flows are telling us. Friday was a substantial spending day. Net fiscal transfer hit $80.0 billion, driven predominantly by interest payments totaling $82.1 billion. That's a considerable amount of liquidity entering the system in a single session. The S&P 500 futures reflected that with a close at 7,421, sitting comfortably above the 20-day moving average of 7,186. Across the 20-day range, we're looking at roughly 601 points of total movement. Despite the fiscal headwind, price action has held firm. Pulling back a bit to see the bigger picture, the 5-day average for government spending lands at approximately $24.8 billion daily. Stack that against the 20-day average of $8.7 billion and you get a clear picture of elevated cash flow through the household and into market channels. Year over year tells a consistent story. Fiscal year-to-date spending stands at $938.3 billion, representing roughly an 18% drop versus the identical period 12 months ago. That's a significant pullback in the amount of fiscal juice supporting the economy. From a market positioning angle, the fiscal backdrop isn't screaming bullish or bearish right now. Our conditions gauge sits at -0. Context matters though. We've encountered similar setups frequently, and the historical record shows the S&P averaging around plus 0.7% over the subsequent month despite thinner liquidity. Markets don't always follow liquidity in lockstep. They frequently manage to advance anyway. One complication is leverage. Margin debt is currently in the 100th percentile, signaling elevated risk. That level has historically functioned more as a caution signal than an all clear. We've now seen 2 straight days of fiscal transfers climbing. Research indicates this pattern has preceded near-term ES gains in the past. It's not guaranteed, but it's the type of setup we monitor. There are some important dates ahead. The SSA payment cycle arrives on the 20th of May, the third Wednesday, which typically influences near-term cash flows. The Treasury coupon interest payment window is positioned around the 15th of May. No decisive fiscal signal pointing in either direction at this moment. Scheduled cash movements in the days ahead will be the determining factor. That's where the opportunity sits.